Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're having a great weekend. Let's kick off with the DXY as we always do. Now, in previous videos, I've been talking about how because we are potentially in a topping pattern in the DXY and the DXY has been very corrective, market opportunities have really dried up over the last 3 or 4 weeks, and it's been pretty slow, pretty torturous at times, waiting for the markets to move, looking for opportunities. And with FOMC last week, that was a catalyst to break the dollar index either to the upside or the downside, and instead all we had is 1, 2, 3, 4, 5 days, and we pretty much finished the end of the week where we started the week. And you can see here we're looking on the daily chart. Normally we look on the 4-hour chart, but we're looking on the daily chart today for a couple of reasons. That's one of them, is to show you that we really went nowhere despite FOMC last week. And so there has been no resolution to this sideways move or this correction, this choppiness in the dollar. And so going into this week once again, I would recommend trading lightly, not taking too much risk until the DXY breaks out one way or the other. And when it does that, we'll start to see good trading opportunities coming back into the markets as markets start to trend once again. So going into next week, I don't have a strong bias on the dollar one way or the other. I actually have a neutral bias on the dollar as it is in a neutral market condition right now. And often when that's the case, what I like to do is I like to be reactive to the dollar instead of predictive or trying to guess which way the dollar's going to go next. And the way to do that is just as we looked at last week, although the market didn't move last week, is there are charts which are structured for dollar strength and there are charts which are structured for dollar weakness. And having a selection of both those charts allows us to play the dollar whichever way it breaks out next week. Now, the thing to understand about this is what we're looking to do here is to be reactive to the dollar, not predictive, because whenever I do this in the weekly forecast, it confuses some people. I get comments saying, how can euro dollar go up and pound dollar go down? Well, that's not likely to happen. If euro dollar goes up, you're likely to see pound dollar going up as well. If euro dollar comes down, you're likely to see pound dollar coming down as well. So the point is you're reactive to the DXY, whichever way it breaks out, and you just don't trade the other pair. And the way I would like to do that going into this week is as follows. You can see we're currently sitting at the 93.43, which was the pullback area we looked at in previous videos. And we're also at the left shoulder here of a potential developing head and shoulders pattern. We have a shoulder, head, and we have the right shoulder over here. So you can see this is a market that really can go either way. Either it breaks higher and it continues to trend, and it negates this head and shoulders, this developing head and shoulders pattern, or we start to break lower and this is a top, a reversal in the DXY. Now, what's quite good is going into next week, we do have a technical pattern here. We have this engulfing candle in the daily, this bearish engulfing candle. And this is the second reason why we're looking at the daily chart here. Now, until the market actually breaks the low of this engulfing candle, as long as there is no follow through here to the downside, this is actually quite bullish for the DXY and we can see the market moving higher. If that's the case and the DXY fails to break the low of this candle and just continues higher, then I will be focused next week on the dollar bullish setups that we'll be looking at in today's video. And conversely, if the DXY starts to break down and we take out this low and we see some follow through and we start to head down to the 92.33, then I will look at the charts that we're going to be looking at in this video, which represent dollar weakness. So it doesn't mean trade all of the dollar pairs in different directions. It means because the markets are choppy and because there aren't a huge number of trading opportunities out there in the currency markets right now, I would rather be reactive to the DXY next week than to try and be predictive and guess which way the DXY is going to go next week. So hopefully that makes sense to you, the concept there of having a neutral market and then being reactive to the breakout rather than being predictive, which you would do normally in a trend because you're following the trend. So the first market we're going to look at is euro dollar. Now last week's video I highlighted the 1.16930 as a pullback area, and we did pull back and test this level. You can see euro dollar is structured to the upside, so this is DXY weakness. So what does this look like going into next week? Well, we have the engulfing candle in the DXY, and if we start to break down and we break below that engulfing candle on the right shoulder in the DXY and we start to get follow through, what you're going to see is you're going to see this double bottom over here, or in fact more like a inverse head and shoulders here now, and this will break higher like this. Well, if that's the case and we start to get that breakdown in the DXY, we're going to be looking at any pullback in this market as an opportunity to look for bullish setups up towards the next key of resistance, the upside and the target set at the 1.1855. Next is New Zealand dollar. Now New Zealand dollar is also structured to the upside. So again, this is a dollar week setup. So if we have that engulfing candle in the daily, in the DXY, and we start to break down, break in the low, and we start to follow through to the downside, what you're going to see is in this market, you're going to see a correction, and then you're going to start to see the market breaking higher. If we start to get this price action in the DXY and we start to break higher, any pullback in this market will be viewed as an opportunity to look for bullish setups into the next key of resistance, the upside, at the 0.7164. Next is Aussie dollar. Now Aussie dollar is structured to the downside, and you can see we went nowhere in Aussie dollar last week. So Aussie dollar structured to the downside is a DXY strength setup, DXY strength play. So what might that look like? Well, you have the engulfing candle in the DXY. Perhaps the market just moves sideways and then it starts to break higher in the DXY without taking out the bottom, or it just wicks the bottom and continues higher. What we're going to be looking for is any breakout here in Aussie dollar next week. If this happens in the DXY, you'll see Aussie dollar coming down and it will set up a potential bear flag in this market. So any pullback in this market would be viewed in that scenario as an opportunity to look for bearish setups down to the next key of support to the downside and the target set at the 0.7158. Next is pound dollar. Now pound dollar is structured to the downside, so this is also a DXY strength play. So again, just to make this clear, if the DXY fails to break down with any follow through below the daily engulfing candle to the downside and we just start to move higher, we break above the line in the sand, the red line in the sand in the DXY, what you're likely to see in that scenario is pound dollar comes down, takes out the target, makes a new low, and it will start to flag like this. Well, in that scenario, any pullback would be viewed as an opportunity to look for bearish setups down towards the next key of support to the downside and the target set at the 1.3480. And the final DXY currency pair we're going to look at here is US dollar Japanese yen. Now this is an interesting market because we have very, very strong momentum. So this is pointing to further advances to the upside in this market. If we have a strong dollar and the dollar is stronger than the yen, then you would expect US dollar yen to rise. But also US dollar yen to the upside is actually a risk on move because the Japanese yen is more of a safe haven asset than the dollar, in the sense that if you have a market crash, you will actually see the dollar declining against the yen. So US dollar yen to the downside is actually risk off, and US dollar yen to the upside is actually risk on. So this is a market that may play out as a setup next week, regardless of what happens in the dollar, especially if the dollar just continues to amble sideways. So any pullback in this market going into next week will be viewed as an opportunity to start to look for bullish reversals up towards the next key of resistance, the upside and the target set at the 111.11. Next is crude oil. Now last week we were looking for a rally into the 74.53 and we had a really nice move into this target. We missed it just by a few points and I would expect this to be completed next week. So going into next week, because we're so close to the target, what I'd like to see is this target to be taken out, and any pullback in this market will be viewed as another opportunity to look for bullish reversals up towards the next key of resistance, the upside, and the second target here at the 76.90. So the next market we're going to look at is Aussie CAD. Now with the recent strength in crude oil, this has led to the Canadian dollar catching a bid. And across the currency spectrum, where opportunities have really dried up in the last few weeks, Canadian dollar strength setups going into next week could be quite good, and certainly something I'm going to be keeping an eye on. So the first market we're going to look at here is Aussie CAD. Now Aussie CAD is selling off nicely. You can see the momentum coming into here after breaking the previous low. We have this head and shoulders reversal up in this area, and this is a market that I would be looking for further declines going into next week, especially if crude oil starts to rise higher, takes out the target and continues up. This is going to push Aussie CAD further down. Any pullback in Aussie CAD next week is going to be viewed as an opportunity to look for bearish reversals down to the next key of support to the downside and the target set, 0.9114. The next market we're going to look at is pound CAD. Now pound CAD is selling off to the downside with that strengthening in crude oil, and we failed to make a high over here, and we actually reversed with a triple top. You can see we tested this multiple times and we broke down below the confirmation point, which is over here, and we broke with momentum. So very simply put, any pullback in this market next week will be viewed as an opportunity to start to look for bearish reversals down towards the next key of support to the downside and the target set at the 1.7194. And the final CAD pair I'll be keeping my eye on next week is CAD Yen. Last week we had a big rally to the upside as we saw the CAD strengthening, and we actually saw some risk on moves. We looked at the US dollar yen rally to the upside already. And this commodity currency rallying against safe haven asset is pointing to further advances to the upside going into next week. We're very close to the target, so not much risk to reward here in this chart right now. But if we can pull back in this market, any correction is going to be viewed as an opportunity to look for bullish reversals. And if we start to break to the upside, we're going to be looking at initiating longs up towards the next key resistance, the upside, the target set, the 87.86. And if we come up first and take this target out and pull back, we're going to be looking up towards target 2 at the 88.44. Next market we're going to look at is New Zealand yen. Now we've already started to break out of this big correction in New Zealand yen. So very simply put, any continued pullback in this market next week, and we broke the previous highs over here with momentum, any continuous pullback will be viewed as an opportunity to look for bullish setups in this market up towards the next key resistance, the upside, and the target set at a 78.60. Next is SPX. Now last week I had a bearish bias overall on SPX, and we did come down, take out the target set at the 4372.19. Going into this week, I am still bearish overall on SPX. Again, it does not mean the market is necessarily going to crash next week, or it doesn't mean that you should go out and naked short the market. It does mean if you have a long portfolio, I would, and I personally have been looking at some protection just to hedge against any of those risks. And if you look at the sell-off we had in SPX, this is technically closer to the sell-off we had last year and the correction of September, October last year than any of the short-term dips that we've had this year. So even if we are going to make new highs in the SPX, I would not be surprised to see a slightly more protracted correction than we've had any time throughout this year. And as I say, similar to the September, October correction in SPX last year. So going into next week, I am looking for further declines to the downside in the SPX. Any continued correction and break lower, so any bearish reversal in SPX, we come down, we start to break some new lows and we make head and shoulder patterns, for example, will be viewed as an opportunity to look for further declines in SPX down towards the next key of supports to the downside of the target set at the 4287.69. What I would like to see to turn bullish on SPX once again, and to greatly reduce the risk of a continued correction or a bigger sell-off in SPX, would be to break above the line in the sand here at the 4541.82, preferably with momentum. And when the market starts to pull back, that would be the opportunity to look to get bullish once again or add to positions in SPX. Next is the Nasdaq. Now last week the Nasdaq turned bearish following the SPX down as it came down, took out the targets. And so going into this week, I am looking for further declines in this market. We've already pulled back. Any bearish reversal in this market would be viewed as an opportunity to look for further declines down to the next key of support to the downside and the target set at the 14781.63. Again, if you don't want to short stocks, that's fine. You don't have to short stocks. At the very least, if you wanted to be bullish, I would be patient and I would turn bullish once we start to break above the line in the sand, similar to what we looked at on SPX. If we break above the line in the sand and we start to correct back, this would be the opportunity to start to look for bullish opportunities in the Nasdaq or in stocks listed in the Nasdaq. As it stands though, if you're long only, then I would be patient on the Nasdaq. Next is the Dow Jones. Now last week I had a bearish bias on the Dow Jones and we came down and we took out both targets, and the low of the week was pretty much the second target at the 33,639.11. So very simply put, going into this week, I do still have a bearish bias on the Dow Jones. We've already started to pull back, so any bearish reversals in this market would be viewed as an opportunity to look for further declines down towards the next key of supports to the downside and the target set at the 33318.14. Again, you don't have to trade this or short any stocks in the Dow Jones. If you are long only, what I would like to see is a rally and a break higher above the 35,459, whether that happens next week or the week after. If we were to rally above this level here, similar to what we looked at in the Nasdaq, in S&P 500, then that would be the opportunity on a break above here, a new high over here, to start to look for pullbacks and to add or be long on Dow Jones or stocks listed in the Dow Jones once again. Next is the Nifty. Now Nifty along with Bitcoin, those are the two markets that we list week after week in the weekly Forex Forecast, and we've just been taking out target after target really for the last couple of months. And again last week we took out the target and it was pretty much the high of the week. We turned almost to the point at 17,924.55. Going into this week, once again, I am bullish on the Nifty. We do have a nice rally to the upside. I would like to see us pulling back first, so any pullback in the Nifty would be viewed as another opportunity to look for bullish setups up towards the next key of resistance, the upside and the target set at the 18047.15. Fundamentally as well, as we start to see crackdowns in China, one of the main beneficiaries of this is likely to be India going forward. So just something to think about when you're coming up with your stock ideas. Next is gold. Now last week, we're looking for a correction and a sell-off into the 17-18-21. We did have a nice bearish engulfing candle here, you can see, from FOMC, and we started to sell off towards the target. So for anybody not involved from last week, any pullback, once again, in this market is going to be viewed as an opportunity to look for bearish reversals. We're going to be looking down towards the target set last week at the 1718.21. And again, this is a setup, if you look back to the beginning of the video, that is primarily going to be helped if we get a failure of that bearish engulfing candle in the daily in the DXY and the market starts to break the high and trade higher. This is going to help gold down to 1718.21. Next is silver. Now this is another market, of course, which will benefit from a break higher in the DXY and a failure of that bearish engulfing candle. If we start to break higher in the DXY and we don't get any break lower and follow through from that bearish engulfing day last week, then what I'd like to see is, just as what we were looking at last week, any pullback in this area as an opportunity, another bearish engulfing candle from FOMC. That was a setup last week. Any continued pullback for anybody not involved would be viewed as another opportunity to look for bearish reversals down to next key of support to the downside and the target set at 21.67. Last but not least, we have Bitcoin. Now, in previous videos, I highlighted the fact that this here was just simply a correction. We're looking further declines into the 42,606 and the 41,323. We did take out both of these targets. We took out this target almost to the point, bounced, and then we came down and we finished the low down here at the second target. Very simply put, going into this week, unfortunately for all the hodlers out there, I am looking further declines in this market. Any continued pullback is simply viewed as another opportunity to look for bearish reversals as it currently stands in Bitcoin, down towards the next key of support to the downside and the target set at the 36,675. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.